Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures on December 8th, bringing you some commentary here in the energy markets. So let's get started here. Crude prices slightly weaker this morning. We're off about 8 cents, trading right around 37.57. That's in the Jan contract. And obviously the big sell-off really came yesterday. We've got the entire energy complex weaker except nat gas. Nat gas is up a touch, not too much, but take a look at that Jan contract. We're now down at around 207.20. Really seeing that prices pull back in that contract, and there could be some opportunity there to possibly look at, but keep an eye on it. I'm not suggesting to get into it here just yet, but I do think there's going to be some opportunity there, so keep a close eye on it. There's plenty of reasons why we've seen oil prices come down here, so let's get started. We'll kind of go through the list here. Right now, U.S. dollar's been a touch firmer. That's helping put pressure not just on oil but commodities in general. OPEC, and that's really the big one. We've seen the conclusion of the meeting there, and they're really not doing anything to limit any oil production there. Traders were really watching to see if there was going to be any signs or any talk of them possibly looking at production quotas, maybe scaling things back a little bit, and they're not talking about any of that right now. So in other words, they're basically saying that even though, for many of these countries, their oil prices are well below their break-even points, they're really not looking to curb any production here right now. And it's going to continue to keep a little bit of pressure on oil here, and really until I think we see some big demand side issues, and we're not seeing that right now. We've got interest rates here talking about possibly being on the rise here. That's right around the corner. And the one thing I'll say about this, though, in my opinion here, taking a look at the Fed, and they may raise rates this time around because they've really been talking a lot about it. But when you really look at things right now, we really are almost in deflationary times here. You look at commodity prices across the board, we've really seen them pull back here substantially. So, they might do it, but I'm still just not convinced here yet that they're going to do it here this December. So we'll keep an eye on that. Obviously, supplies here in the U.S. are still running at record levels. Demand still remains questionable. Now, we did get some positive news out of China in regards to their demand. Imports here year over year are up about 3.8%. Year to date, they're up a little over 7%. So we are seeing the demand side there pick up a little bit, but certainly not enough here right now to absorb a lot of the excess supply side. Short-term technicals, looking at the chart pattern, we've seen some lower lows and some lower highs. So that's pretty much indicative of a bear market. But short-term technical indicators are really oversold. So there could be some opportunity here to see a little bit of a bounce. Right now, I think it'd be more short covering, possible short covering rally than anything. I don't think it would be long lasting. But nonetheless, I think traders at these levels, as I've talked about this before, you should watch this market, because once this thing, I think, starts to consolidate a little bit, there could be a real good opportunity here to the upside. So give me a call, shoot me an email, we can get into more detail. Futures and options on futures may involve substantial risk and may not be suitable for all investors.